Hi, welcome to the Market Alert for Friday the 25th of May 2018. Still in the process of recovering everything from the wonderful Windows 10 update that managed to sneak through and load itself onto the computer. Official update, it's just that for some unknown reason my computer doesn't like these big monster updates that Windows sends out periodically. Too frequent for my liking, but there you go. Anyway, back in action, and it's taken a long time to even get to this level. But anyway, British pound yesterday, we see the market trading sideways, and then we had the buy signal. You see a lot of volume. Eventually, after a retracement, the market moved higher, traded up to the 134 level, and then also traded sideways, waiting for the European Central Bank Draghi interest rates, and then the market put in a couple of sell signals. The market moved lower, and has since then traded sideways to lower, which you can see there, and we're just about to kick off in the European markets. In the daily chart, a very interesting picture is emerging here. I'll just adjust this chart so I can modify it slightly. We're definitely below the 200 bar moving average there. Let me just turn these crosshairs off, and you can see that we've got this downtrend established. I'm just going to adjust this to make things just a bit more. There we go. So you can see how tight things are. We're getting into this sort of triangle, descending triangle pattern here that in theory should blow out this way. So we'll see what happens there. But we've had a big move to the downside for the last month. So we are due even a dead cat bounce in this market. So the pound, they're just sort of building a base, and also notice the volume there is higher than it has been as well since here. So 2 days and trying to move back to the upside. We'll see, but it could do with a shakeout first before moving to the upside. News, what have we got today? We're heading into the holiday weekend again, of course. The US closed on Monday, the UK, Europe closed on Monday as well. We've got second estimate GDP. This is going to be out today. Carney, he's been out the last few days whipping up his Brexit frenzy. That's because he knows that the debt situation is getting bad. Deutsche Bank are laying off 10,000 bankers. There's also a problem with one of the payments, and it's all starting to bubble up again like 2008. And it looks like they're going to, any sort of, the Italian bonds have collapsed as well. The yields have gone up. So it looks like we're going to see some sort of Brexit excuse when things do start to fall apart. And we are into 10 years now of a so-called recovery. And the longest business expansion, I think, in history, I think it was 91, 92. I'll have to double check that, but it was around the sort of early 90s, mid 90s. But I will check those details and let you know. But we are getting towards a situation where we've not had any sort of economic pullback, as it were. We've also got Powell speaking, Carney speaking. They're at 220, so just before the Dow opens, and nothing else really to report there. And then in the Dow, we see yesterday the market starts moving higher at the 200 bar average. You can see that once we get back through this, how this held the market until eventually it blew out over here. And again, what's interesting is if you have a look here, you're wondering why the market's struggling at these areas. You'll see it's the 200 bar average, plus you've got the R1 But notice the volume in this bar here and how it needed to drive through. There's a lot of short covering here as well to drive the market back to the upside there. So as soon as you overlay some of these tools that are used by the majority in the industry, all of a sudden you find out why the market isn't moving or doing what you'd expect it to do. And it also, if you grab the trend line tool as well and draw through there, you'll see that eventually the market breaks through this one as well, and then the real pressure starts here, and then eventually it explodes as the market has to break through the 200 bar average as well. In the daily chart of the Dow, you can see the market's still moving to the upside. I'm just going to adjust this trend line here. I'll just move this back a bit and draw that in. The market's back above all of the averages there as well, and having broken out of the downtrend that we saw there. Volume is still low, a bit of an increase the other day, but you know, that was in this bar, and price is trying to move higher. What I'd be inclined to do is this, draw in 76% there, market already at the 62% area. I'll just move this over a bit, and then of course you've got the recent high as well, which I'd have a keep an eye on as well. But it'll be interesting to see if the market ends on a high today going into the long weekend. It generally does this time of year for this the Memorial holiday in the US and just the Whit Week bank holiday for the UK. And then finally in Bitcoin, you can see yesterday that we had or over the last couple of days we've had some selling followed by some support at the 76%. So I've used this now as the lower trend line just to see what is going to happen here. But certainly some support in this crucial area for the Bitcoin currency there. Yesterday you'll see the market shook out, tested first, didn't hold. The market puts in another one where it comes off the lows. I've told you about this bar, keep an eye on these sorts. Then they retest and again come back down to the S1, and then you get a few $100 all in one go within 30 minutes, and then the market's been sideways to higher there, still below the DP for yesterday but above so far today, which again is an indication that prices could move back to the upside. And that's really it for this one. If there's anything to report, which I highly doubt, just keep an eye on Powell and Carney at 220. But other than that, have a relaxing weekend, enjoy the sunshine, and I will see you in Wednesday's market alert, because we'll wait till Tuesday before the market gets back to normal. So have a good one, and as ever, thanks for watching, see you in the next one.